Very good morning, everyone. Welcome to this webinar of Admiral Markets. My name is Chris. Thanks for joining us today. I just want to ask, first of all, if you could check the sound. Is it everything? Do you hear me fine, first of all? And I hope that you had a good start of the week. Good trading so far. It perhaps was a bit of a quiet Monday, but we're going to take a look at what's going on in the market in just a second and take a look at the live Forex charts. But first of all, we have these disclaimers to discuss. The fact that this webinar is shown to a global audience, but may not be suitable for everyone, is something you need to check. Take a look at this link, select your country of residence, and contact the appropriate entity. Also, please be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, it is for informational and educational purposes only, and by continuing watching this webinar, you agree with this disclaimer, plus you're aware of the risk involved when trading. All right, great. Thank you so much for those confirmations. Good to see you both. Bob and Fabrice, great to have you here. I hope you had a good weekend, by the way, and everyone else as well. I had a very busy, partly busy weekend, at least. Was nicely walking and doing a bit of painting, and went for lunch on Valentine's Day, so it was all good. All right, so yeah, I wanted to let you know about, as always, I wanted to give you a heads up, Supreme Edition, lots of additional features. Please take a look at your own leisure. Too many to mention in here, you'll get bored and fall asleep in the meantime, but as you can imagine, as I've mentioned before already, money management calculations and correlation matrices, all of that, as you can see here, Alarm Manager in these pop-ups as well. And of course, also the, let's see, WebTrader. No, that's not it. Here it is. WebTrader, very simple. You can just go to trading platforms, click on MT4 WebTrader, click on launch, and you'll be accessing live charts before you know it. There we go. There it is. So within a few seconds, you don't even have to open up any software. You got immediate access. As long as you have internet and some kind of mobile device, you can watch the charts. So that's very, very, it gives a lot of flexibility and mobility. All right, let's take a last look at the calendar and the heat map, and we'll take a look at the live charts. We got inflation rate on pound, German economic sentiment, and some dollar news coming up. Bigger movers of today, one of the bigger stocks is Cisco and gold were big movers. Euro ruble, dollar ruble, euro pound, and some stocks here as well that didn't do too well. Let's take a look at the Forex pairs though. You can see that most were here as always, but there are a couple sticking out. But basically, although the volatility was there was not much movement. Yes, there were lots of ups and downs, but that's why they end up near this 0% range, because basically they close where they opened. So there were a lot of ups and downs, except perhaps here what is this one? This is the yen, right? The yen gaining something against the dollar as well. That was probably the biggest move of the day. And we can take a look here. Yen and pound being the number 1 and 2. All right, so big volatility, not much movement. Let's take a look at the charts now. All right, I want to start with the dollar yen because it's right in the zone that I think is very interesting. I talked about it yesterday in a recap video that this zone particularly I think could be very interesting for short, and it's still right there. In fact, it was a bit higher just a few hours ago. It hit almost 115, which came close to, in my opinion, an ideal short. Now, does that have to necessarily mean that it works out? No, but I think there are good reasons to in my opinion, see potential for a short right here. First of all, we got a 61.8 fib on this swing high, swing low, and yes, it could be true that we should put the fib on this swing high, swing low, but in both cases, we have a confluence at 115. In one case, a 38.2 fib, and with the smaller fib, a 61.8 fib. So I think those are two good reasons. Also, we have a supply and demand zone right in here, a tiny little box with impulse before it and after that. Those tend to be strong resistances or support, in this case resistance, when price gets back to it. So I think another good reason here for a short. Number 4 is the proximity of these big bottoms, I think. Right here. Now, it didn't quite get there, right? It's not right at that level, which is about a bit higher, 116-ish. I got a little bottom in here too. But I think it's pretty close. I think that in general speaking, might not have to get all the way there for a touch, but it could be worth considering with the stop loss placement. We're retracing last week's bearish candles, obviously, and the monthly is not closed as yet. Now we do have a couple of days up at the moment, and we broke yesterday's high, which is actually good because I wouldn't want to trade it against such a bullish candle if the high was not broken as yet. And the reason is simple, because with such a bullish formation, I would actually expect the high to be broken before we have a chance of falling. So if it didn't break the high, I wouldn't be interested in shorting as yet unless it broke the low, but it did. So I think that clears up the path for a potential short. So I think that the only thing that might be considered a danger is the fact that price could push maybe to really touch the bigger bottoms. But considering the supply demand zone here, there could be very good reason why it doesn't even get to that level. So from a stop loss perspective, I think that going above 115.50 or 116 could be the best. Now that's a pretty wide stop loss, so that is more of a swing trade and an intra-week swing trade than obviously an intraday trade, because it's what the stop loss is at least 100 and if not 150. So that's a pretty big stop loss. Not everyone might like that trade, but if I was looking at this chart yesterday, I said that this is an interesting shorting zone, and it could have been even worth the pending order actually. So maybe some of you are in that trade already with a stop loss above the 78.6 fib, and that might seem big, but considering the target, which is at 110, the first target is 110 at least, could go lower, then obviously the reward of about 400, 450 does compensate that. So that's one thing I'm thinking about and showing here. Now the other thing is to wait for a bit more confirmation perhaps and try to put the stop loss just above this top. All right, so instead of using the wider stop loss, use a tighter one and try to take a smaller, or not a smaller trade, but try to basically trade this turn and fall, but not using a wider stop loss, so using a tighter one, right? So that because taking a short in here, as I said, we don't know if the price is going to make that small little dip rise, before it falls, or if it will turn. And if we wait for a bit more confirmation, perhaps about the turn, then we can use this level as a stop loss, because then, I think at least, because then there's a better chance that price will not go up and retest that level. So how would I personally see that? When would I decide, okay, I'm going to use a tighter stop loss in this case? Beverly's asking, am I targeting the low it reached? Well, yeah, it's always never wrong with just aiming for the low. But in this case, I think it's still okay to aim for the target, which, depending on which fib it is, 110 or 108, I would say 110 is fine. But yeah, there is the possibility of going to 108 and then after that 106 or 106.50, if I remember correctly. But I think 110 is a decent target. I think that this week 110 is a decent chance. This is still momentum, and we didn't have any 5 to 6 days not breaking this bottom, which means that this is still a lot of power in this move. This is still an impulse. As soon as 5 to 6 days do not break this bottom, then it might be better to aim for the bottom. What does that mean? Well, it means that this week, basically, there's a good chance that we're going to break this low. And if we don't break this low this week, then it might be reason to be cautious and aim for the bottom, in my opinion. So that answers that. And next question is about what kind of, I would like to see a 4-hour candle, basically, that brings price at least below this candle low and is bearish. Let's zoom in here. So what do we have now at this moment? Obviously, we have a bullish candle that's in control. Because what happened after that? We got doji, 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 all kind of indecision candles. So basically, that bullish candle is dominating the market here at the moment. Even though I see that price is at resistance, in my opinion, very strong resistance, a lot of confluence resistance is there. Price has not responded. It's responded with indecision, but it hasn't shown yet signs that it's really turning as yet. This could be indecision, but doesn't mean it has to go down. It could be indecision and still push up. It's just indecision for price when it's pausing and seeing how is the market reacting to this resistance zone, right? A lot of people should see this resistance zone. The question is, will it be used? So market could be just pausing and seeing, is it being used? Oh, maybe not, and it still continues. So before I want to trade it short, one way of confirming that it's responding to this level is waiting for a 4-hour candle that does this. Goes to the low, which means that this is the dominating candle. That means that certainly that this trend line, for instance, and this channel is broken. And we're getting a turn of events here. We could then see perhaps a small little retracement of that 4-hour candle if we go into great detail, and we should see probably something like this continue. There's a good chance for that, I think. So anything, this candle, let's take a look at a normal candle. How many pips is this candle? 60. So let's see. It should hit 114 at the minimum. Preferably a bit lower, 113.80, 113.90. With a close, just a few pips, preferably away from the low. Definitely not more than 40% wick. That's the type of candle. And when that candle prints, now or the next one, something like this, I think a short, immediate short at the candle close, or a short at a small retracement of the candle with the stop loss above the candle high or just above the top here, is then it's adequate, or in my opinion, okay to use a tighter stop loss like that and not use the wider one above this top. All right, so, and just to confirm one last time before I become too repetitive, is that I'm not going to use a tighter stop loss now because the dominating factor is still the upside momentum here, and it could still push like that. And therefore, I think that the only safe stop loss is either above here or above here at this moment. And then you'd still never know. It still could get knocked out, right? There's never a guarantee. But technically, I think it's the accurate stop losses up here, here, or here. But once it prints like this, a candle like that, then I can use it this level, not now. And in that case, I'm looking at a stop loss. Depending if I take the high or the low, if I can take the candle high, it's going to be around 75-ish. If I take the high here, it's still going to be about 100, actually. All right. Let's see, 2 more questions, and then we can take a look at the euro and pound USD. A pending short at 115, I think makes a lot of sense, and is a very good, strong resistance level. That 4 hour that broke the high was a high test where the high was rejected. Mm, this candle, I can see your point indeed because it did break these tops, right, and then kind of made a bit of a, so it could be kind of seen as a shooting star. That's true. Didn't look at it from that way. You can see how it's good to see different perspectives. But I think that I think it makes sense. I wouldn't say that the short here is not good, but I don't feel confident enough to place it right above that high. It's possible to do, uh, but I just didn't feel confident enough to say that that's a good stop loss placement. But it's possible. It's just I don't think I have some hesitations to say that that's a ideal stop loss there. I think that these two are still a bit better for the moment, but I can see your point. 115, I think anywhere, 115, 115.50, all of these remain good shorts, and I wouldn't expect price to break above 116.12 at the very, very, very latest. And if it does, well, then obviously the whole analysis is out of the window. Euro dollar, I think that, yeah, we're getting a bit of a retracement here. Broke this channel and kind of respecting the 38.2 fib. And well, that could be a bit of a bouncing spot, but then again, considering the fact that we broke this channel, it could easily retrace it deeper, for instance, to the 61.8 or the 50 fib. So maybe what I have in my mind is maybe kind of a retracement like this at the 38.2 fib, get a bit of a head and shoulders, and then see price fall down to the 61.8, which will be then a bouncing spot back up because of the support levels in here and the trend lines that are coming in like that. So this seems to be what I would say is what I call the path of least resistance, which means that this has the highest probability at this moment, but it's not a shoe-in or guarantee at all. But I think it seems the most likely. Now, obviously, before I trade it, I'm going to wait for price to confirm what I'm expecting. So let's dive into whether, first of all, we're going to get a bounce at the 38.2, and then if we do, whether we get a rejection somewhere in here for that move down to the 61.8 and then a bounce again. All right, so this is momentum, obviously, right here, candle lows and highs pushing downwards with the lower lows, lower highs. We got about 3-4 candles not breaking that at the moment, this low. And this could be a small little triangle like that, and we could get basically either a break to the downside and still one more push lower, or we can break this to the upside and make a bit of a bear flag like that. Let's take a look at the daily chart. Pretty strong daily candle. Let's put a level there for the high. And we got a candle low right in here from the weekly. All right. Well, quite a dense chart, I would say. Not a lot of space, up or down. kind of a bit of a pause. Well, I think that there's a good chance if we look at the smaller time frames like this, for instance, draw something like that. Let me take a look at the other time frames here. Could be a breakout to the downside, down to the 50 fib and weekly low, right in here, around 110.80ish. That could be a breakout to the downside, like this. All right, I expect a bounce because it's a weekly low and a 50 fib. If we don't get the break here, but we get a bounce, and we do get a bounce, maybe perhaps to retest this head and shoulders potential. In that case, let's take a look at the 5-minute chart. Okay, let me just move this. All right, let's keep an eye on this trend line in that case. And I would probably need to see a, excuse me, a bit of an impulse here, and a small little bull flag, and then a break. That would probably only be the way to trade it. But if that happens, then the target I think could be the 112.50. 112.50, which is the level on the left here for the potential head and shoulders. And I guess if we put a fib like this, it could be, what is it? It's a 50 fib. All right, so whatever the upside is, I think that's the target, 112.50. So those are probably the two scenarios at the moment. And then later this week, there could be a short from here, or a long from here, or from here, from these fibs, basically. But that's something we'll see, probably talk about tomorrow when price gets there. But those things, of course, could happen too later this week. And we'll be looking for price action. Is it worth the pending order? Maybe the 61.8 with a stop loss below 109.75. I know that's tight, but it's assuming that would really bounce pretty accurately at the 110 psychological level. With a target of 112.50 is still good, I think. That could be worth a pending order. Otherwise, I would not put a pending order at 112.50, but I would keep an eye on price action to see how it responds. I would not put a pending order here either. I think that probably would be the only option for a pending. There's still, bounce trades possible at the levels I just mentioned, but I don't know if it's worth a pending order. Just probably more worth keeping an eye on the market and seeing, how does it respond when it really gets there. All right. Let's see. Pound USD did reject at this level and made ABC down to the support level, which is seemingly being used as a bouncing spot. That was discussed in the weekly video yesterday, and now we're getting a bit of a reaction to that. And otherwise, it's a pretty tight channel, pretty choppy move. But yeah, it is at the bottom, so it could be a bounce spot for a move up to the top. So this could be a long right here. We got engulfing twins at that support level. Stop loss just below this this bottom. Let me just check some other charts here. All a bit of an indecision and triangle formation. Actually, let me draw this trend line to add to the trend lines we have. Yeah, nothing much to say about it. It's obviously in a triangle or some channel correction. If price does break this to the downside, there could be a fall down to support, which could be a bouncing spot, and perhaps a break spot for further downside to test this bottom. If it does break the resistance here, there could be a small trade to retest this top, and if it breaks that top, then to the 50 fib and weekly trend line. Right? But those are things for later concern. But those are potentials that I talked about yesterday too. Just wanted to repeat that. But those are kind of the scenarios that you can think about for this week, depending on which levels are broken. But these are what I consider like the most important levels and zones to keep an eye on. In the meantime, it's just, you know, obviously this could be a bounce, but as you can see, it's in a consolidation, which is relatively tight, so it's maybe not the best trade ever, but draw some trend lines like this. All right. So let's see. We have a bit of a mess here on the 1 hour chart. Let me take a look at where the pivot points are. About 37 pips. Yeah, it could be worth it. I mean, there's a good reward to risk, even to this trend line, even better to that trend line. R2 is 145.67. That's all the way here, actually. R1 is 154, 145.04. That's this trend line. That's the R1 pivot point. Price is still below the pivot, though. 144.50. Just wondering if it's not better to wait for a slightly deeper hook back to, for instance, 144.20 or 144.14. We do have pound news, so as far as I am aware, let me take a look. Yeah, so that's something probably not to really do now. But if the news event finishes and prices, it depends on the news event. It's difficult to imagine what the news event does for the moment. Anyhow, there is, even if it breaks like this, and then after the news event you get a bit of retracement, that could be still a good long like this, or if the news event does like something like this and then it kind of stops at the trend line, that could still be a good bouncing spot as well. It's difficult to say, but in general though, this is support and I wouldn't expect price to break it. If it does, then obviously the bounce trade is out of the window. If it doesn't break that and stays above it, then there could be some space for upside today, I think. All right, so we're getting a bit of downside indeed, and let's see how much it can reach the 114. It's at 114.30 now, and Beverly added that wouldn't put a stop loss above this doji, but thought it was a good confirmation. Agree with that. Let's see, Beverly is in a short from last week. Not sure which, was that the short that you discussed last week? The same one? I think it was here. If that's the case, well, it looks like it's at support to me, but that doesn't mean it doesn't have to break. But I think there's a good chance of a bounce at this level. But obviously, it doesn't have to bounce, and it could break, and the news event could let it break and go right down to this trend line. So, but if you're in that trade, I don't know, it could be maybe, not sure where you took it, but it could be worth maybe putting to break even, for instance, somewhere around here. And it could be maybe worth to put it just above these tops of yesterday's candle high, for instance. All right, pound yen is kind of similar like the dollar yen. It's going back to the previous triangle and the 78.6 fib. So it looks like it's at resistance. Sideways move here though. So here too, would like to see a candle that can probably break below 164.63 and put a close below that. Same as the dollar yen. Dollar CAD is failing in its breakout here. That really didn't go anywhere. Couldn't break this resistance. But I'm not too convinced about the downside either. Let's see, 3, 6. I would say it's still a bouncing spot. It's still within a level that I think that could see a bit of a bounce, but that's certainly counter trend at the moment. Let me get rid of everything here at the moment. Let's put a blank little template here. I'll probably just leave this one alone. I just don't see something I'd like to trade. I wouldn't like to trade it to the downside nor to the upside. So let's go to something that could be interesting. We got a big wick last week. We broke already last week's low on the EURUSD, as you can see, and yesterday was a big bearish candle as well, and that resistance line that we had on the chart wasn't able to be broken. Just slight intraday push, but otherwise we didn't see a full break. And a pretty strong impulse now occurring on this EURUSD, and it's following the euro dollar in its move, as you can see. Let's put on the moving averages. The euro starts to fall pretty fast. Let's take a look if that's the Aussie. No, the euro dollar is bouncing. It's probably the Aussie. The Aussie is rising quickly. All right. So I think that it's looking interesting for a continuation to the downside, at least to get closer to the support level, and that could be still a decent amount of space here. We are at potential supports with these bottoms, but the momentum is pretty strong, as we can see. So this could keep riding until we hit the level that might not be breakable, and eventually we'll get a bounce and we'll get a retracement, and we'll see some kind of rebound, dead cat bounce, whatever it's called. But for the moment, this could keep riding, for another 50, 60 pips. Let's take a look at where the pivot points are today. the S1, for instance, is 60 pips away from here, for instance. So could easily, make a small little run like that and still continue with that momentum. Considering, let me go to the 4-hour chart here. Got a bit of a pin bar here on the 4-hour chart. So probably the best plan of action is to wait for the break, because obviously it's right at a low right now, so that doesn't make much sense. But if it breaks through that bottom, and on the 5-minute chart, I think the 5-minute chart is good. If it breaks that bottom like this and shows a bit of a correction like that, or a hook back, that could be an intraday short right there with the momentum. Now, obviously, you got to be careful to take the profit pretty quick, because there is a chance for a bounce, as I said already, at 154, at 155, sorry. All right, Aussie, if we're talking about the Euro, we can take a look at the Aussie, and that does not look interesting to me because price is right at resistance. But if you're looking for a swing trade, then perhaps here could still be one. Let's see. Maybe a bounce off this trend line, but considering the bullish candles that I see here, that might not be that appealing actually. And that's why I'm not that fond of this Aussie at the moment. It's too much of a mess, this daily chart, and probably would like to see it just bounce and break here through this. But at this moment, I would really have to see a clear daily candle rejecting at this level and seeing really a struggle at this resistance level. That could be something worth it, but at the moment, not interested. Kiwi is breaking through this trend line here. But here too, quite a mess, isn't it? If you look at these daily candles, it doesn't look, that appealing to me. Quite a choppy little move here. I think that really it only gets interesting if we break through that horizontal support and resistance. I would like to see a daily candle break through that, and then a bit of a retracement tomorrow, and that could be interesting short. Same like the dollar yen on the 4-hour chart. Would like to see a 4-hour candle that's something like this. That could be interesting. That same principle I would use on the Kiwi. So the Kiwi, clear daily candle below it. Aussie, a clear bounce off that trend line. Otherwise, it's not interesting. Pound yen, same like the dollar yen. I want a clear bearish candle below 164.60. 114 on the dollar yen. Pound USD, depends on the news event is. It's already breaking, but could be a bullish bounce, which is actually already doing before the news event. And euro dollar, once again, I think that could be a breakout or a bit of a bounce potential here on the euro dollar. All right, so that's a quick summary so far. And last but not least, of course, we looked already at the EURUSD, which could be small intraday trade to the downside here on the EURUSD, and eventually it will be at a bouncing spot. All right, so those are some of the majors. Oh yeah, euro yen, sorry. Definitely following the dollar yen, but even weaker. It looks like a rising wedge, doesn't it? Yeah, I mean, there's really not much strength to the upside as it seems now, at least. You got price still below this resistance line, still below this bottom. So there are a lot of reasons to look for resistance, just like the dollar yen. A lot of confluence there. And I think it's the same. I don't want to sound boring here, but it's I think the same plan again. I would like to see a 4-hour candle here that is a size of about at least 50 pips. Let's take a look. I'd like to see 127.38 on this and a bearish close, and that should be a good candle that's below this trend line. Right? A candle like that, clearly see breaking that rising wedge. All right. So those are the majors. Is there anyone who wants to take a look at particular cross that you find interesting? In the meantime, let's take a quick look at these some of these indices. DAX hit the 38.2 fib, started falling, hit the minus 272 target. Oh yeah, the New Zealand CAD. Thank you, Berman. Escaped my attention indeed. Good. So DAX falling further, right? And in now definitely more than ever in a bearish mode. The last trend lines broke with that particular fall. This trend line, for instance, clearly higher, lower lows and lower highs. So this seems to be a retracement, I would say, for one more downside. We got a lot of resistance, just like the dollar yen, a lot of resistance confluences with price hooking back to it. So gold found a bit of a weakness here on the right side here on the lower high we have here, higher low, sorry. All right, so price looks like it's making a bit of a rebound, but let's take a look at the daily. Let's get rid of some of these fibs. I wouldn't be too excited about the upside though for the moment. It could still easily be a bear flag. So gold is a bit different. We had a rally. We have this fib on, as you can see here, on the weekly, and that was basically fibbing this move up here and price hitting the 61.8 fib and making a big acceleration. But well, obviously did also expect price to find some resistance here, which it definitely didn't. The momentum just blew through it and just broke that channel very strongly. So I think we could put. Let's take a look now at the. Let's take a look at the monthly. Well, for the moment, this is a bullish impulse, and are we going to get a continuation of that, or is this going to be a bit of a hook back, and we'll probably see a bounce off the 61.8 fib plus trend line? I think that's the main question at the moment. For me, it looks bullish. Obviously, we broke out of this falling wedge, so I think we're in bullish territory, but we could be near resistance still because we got the long-term moving average, we got these tops here. So a bit of a pullback before we find more buyers, I think, seems the most likely at this moment. So 61.8, I think, is a good level to keep an eye on. 1130. Silver is probably a bit different. It did break, but with less enthusiasm. Still respecting one of these fibs here. So yes, it could find the upside too. But all in all, I think I'm not as impressed of the rally as with the gold. S&P 500, same thing, 38.2 fib, of course, but bounce off the bottom, so not as much weakness as the DAX. Nasdaq did break the bottom, the low. FTSE as well. So we see all these indices actually in the downtrend. with most of them breaking the bottom. All right, quick look at the dollar index right at the bottom of this, what could be an ascending wedge, right? Or is it just a support trend line that will get broken? That's the question. It's going to be interesting to see how price responds here. But if it breaks, then we still have support at these bottoms and even at the 50 fib. So dollar support is not out of the window here. I mean, there could be some dollar retracement going on at the moment, but doesn't mean that the upside is over and out. I think unless we see really clearly price breaking below the 50 fib, I would say. So there's still a lot of space for the uptrend to continue, but definitely in a retracement mode. Look at these last week's bearish candles, and we can see that pretty clearly. All right, New Zealand CAD finally. Let's take a look. Yeah, that's true, Roger. A lot of these pairs indices are identical twins almost, except I guess the S&P 500 was bouncing up that bottom, and they're following very close to the dollar yen. And if I look at the dollar yen, I think it looks like a bouncing spot for more downside at the moment. But who knows? It could still push a few of those pips, 50 pips, before it makes the ultimate turn. Sometimes it does that. It seems like it's almost making a bit of a fake before you get the real move down. I mean, I really think there's a good chance that the move down will happen, but you never know how far it could push and push and push, almost to the point that we think, okay, the down move is not going to happen, and then it happens. It almost seems like Murphy Law, doesn't it? Yeah, waiting for a daily candle close if you want to be more cautious, is absolutely a good idea. And if you want to be a bit more conservative, then the daily is perfectly fine. And if you want to be perhaps a bit more aggressive, you can use the 4-hour chart like I'm thinking of. And if you want to be more aggressive than that, then you can use an hourly and take a short now. But then, I think with the wider stop loss. Wow, big break indeed. It's a bit cluttered, so let's take everything off. Start with the weekly. You can see there is a potential triple top, but price is making higher lows too. And let me move this here a bit. Well, this could be breaking. All right, we got a clear momentum here. Let's put the fib on that level, 38.2 fib bounce. So the target is the minus 61.8 target, and there's still some space down to that level. Don't get me wrong, it could fall further, but that's the minimum I would expect. All right, this is the 4-hour candle. So let's put a fib on that candle. 23.6 fib retracement. It would be nice if we got a 38.2 fib at 91.10 with the target at 90.10. Or even a 50 fib would be nice, 91.25. That could be sweet retracement for a downside. So let's see if we'll get it. Is that what you're thinking about, Beverly? Is that Oh wait, let's see. Beverly said went long last week from 91.79. All right, let's see. Ah, you took, got it. This trend line, right? So you went long on that break, understand? Or just before it, perhaps. Anyhow, so let's put a line there where you took it, 91.79. All right. Let's see. Yeah, it is. It is not looking good for bulls at the moment. And I would see downside at least to this target, but it could go be more, of course, as well. So um, now we are not. I wouldn't say that this trend line is over and out. Oh, cannot see it anymore. One second. I mean, looking at this, of course, we're in the middle of breaking it. This is a daily candle, but it definitely, from my point of view, looks bearish indeed. We're getting into bearish territory. And let's see. You could use this bottom perhaps to move the stop loss just a tad. That doesn't help much, but at least does reduce the risk by a quarter, I think. If you use this bottom, and if you maybe exit the trade at 91.20, and if price does get back to 91.20, you reduce the risk by 75%. So then you only have a quarter of the risk left. Maybe that could be a backup plan. Yeah, that's what I would be thinking of. Basically, when this trend line broke, it did seem good, but I think that probably using these bottoms as a stop loss would have been good indeed. In retrospect, of course, it's easy to say in retrospect, but just trying to help you. I think that when we get a momentum like this, you don't want to live through the potential zigzag that it could occur, like it's doing now. And because we're at support levels, and if you put a fib from here to here, if this is a pullback from our upside, right? If this is a break pullback continuation, and it does bounce off the 61.8 fib like it did, putting a stop loss there, and then we want to see the push up. Yeah, definitely. Yeah, definitely could have been that indeed, Beverly. Could have been a discount pullback from our upside, and it could have been a hook back to this trend line. Absolutely. I don't think there was anything wrong with staying in that trade, but I guess when we see a candle like that, we do have to also consider that it could be like this, and then these bottoms should hold it. Otherwise, it's not looking good. Yeah, it's easy to say afterwards, absolutely, but we can still learn from the trade together and see for future reference how we could approach similar situations indeed. And uh, then in that case, I think a 61.8 fib was a pretty good level for a stop loss. And that's, I think, always a bit of a danger. Nothing against you personally, Beverly, but in general, I think all of us have the fact that we kind of get maybe, let's say, married to our trade in a way a bit because we don't want to, depart. Like we don't want to get rid of the trade in a way because it was doing well, and we kind of get maybe tied to it a bit. And that's always difficult to say. Okay, now this is the moment that I really I'm going to cut the ties with this trade, and this is the boundary. And that's definitely something that's not easy, I think. But that's just a general observation, not necessarily for this trade, but just in general. Cool. Yeah, great job, perfect. Good. Anyone else want to take a look at a trade? Let me do some hunting for the pound odd, and let's see. Let's take a look at the pound odd. But if you have a preference for something else, or if you're in a trade like Beverly, or if you have an idea for a trade in general, just write down the pair and time frame. We can take a look at that, and you can see what I think. But in the meantime, I'm going to take a look at this pound odd because we did break through. Not only did we break through this big weekly line that you see here, let me make that a bit different color. But we broke through this orange line. Some of you maybe are in that short, the break of this trend line at this trend line. It's a bit of a choppy chart, right? But did break and is moving lower. So we're seeing a bit of a wicks here. So I would say moving a stop loss just above this high is fine. And why is that? Because basically when you trade the breakout like this, if you see a candle like this here, breaking below this trend line, and you're patient enough to take a pullback or even on the close, that's great. You're taking the breakout of that trend line. But what we're looking for really is to trade the momentum to the downside. And I don't think it's interesting to stay in for a hook back here and hope that it's going to turn again. No, I want to see this fall right away with a pretty fast movement here. So from that point of view, I think it's good to lock in some profit or move it to break even, depending on where the entry is. Now, if price does make the upside and does take out the stop losses for break even or a small profit, and then shows signals of a turn here with a 4-hour candle like that, it could be a pretty good moment to take another short. But at least we know at that point that we got a bounce, and we got a rejection, and we have confirmation from that. Whereas if we keep the stop loss here and we see price doing this, we're hoping the price will turn here instead of having the evidence. That's why I like to trade the momentum break, but not keep an overly loose stop loss for too long, personally, and rather use some more active management and re-enter when we see signals again of a continuation. Let's see. Yeah, I think that that's the best. But I mean, if you obviously there is a good chance. I'm not saying there's not a good chance for price to bounce off these fibs because we could be in a break pullback continuation like that. But I think that generally speaking, it's always a good tactic with breakouts to be a bit more demanding on the active management. But we do have, if you like the looser stop loss idea, you do have a good daily candle like that, and putting it above the high could be a very fair option as well, really. So there are two options. I think that it's really up to someone themselves to say which one do they feel more comfortable with. Another option could be indeed 5 candles now breaking this high. Then for sure we know that that momentum is over, and there could be a bit of a retracement like that, and then continuation. Yeah, that's absolutely right. It is easier to take some profit and protect profit because psychologically we tend actually to become more conservative when we're in profit, and we tend to be more risk seekers when we're in losses. That's actually Most of us have that, like the vast majority. It's just a human tendency psychologically to be that way, to be more risk seeker when we're in losses. Either we're in loss with the trade or for the day or for the month. And we tend to lose the feeling for risk a bit more when we're in losses than when we're in profit. We're at profit, we all tend to be more conservative. And I think that that's maybe one of the reasons why we naturally tend to grab on average smaller wins and allow the losses to become bigger. And that's why I think one of the main reasons why we see that it's so difficult to let winners run and cut losses short, and so easy to let losers run and winners to cut short because of the psychological effect that we just become more conservative when we're in profit and become more risk seekers and takers when we're in losses. So um, now you could say to me, by moving the stop loss here, maybe that's too conservative, right? One could definitely view that. I could see your point, but the whole idea behind it is just to, for me, when I trade a breakout, I like to trade the momentum and just trade that particular piece. And when that pullback happens, then I like to potentially re-enter at that point. So that would be my counter argument against anyone who said that. Uh, with the New Zealand CAD, sorry Beverly, I don't want to bore you too much with this trade here, but with the New Zealand CAD, placing the stop loss below these bottoms is a bit different. By coincidence, it was actually in negative territory for Beverly. Would have been about around 30, 40 pips loss, max 50. So that is about a quarter or a fifth risk still on the table. But that's okay because that's the technically, I think, okay stop point to put a stop loss. And that's fine as well. In that case, we're kind of locking in a small loss, but that's also good. It's cutting the losses short. And with the pound odd, it's also cutting the losses short and actually locking in a bit of profit. So they are actually similar. New Zealand CAD, pound odd, moving the stop losses is similar, despite the fact that one is a small loss and one is a small win. That idea behind it is the same here. Euro pound, we haven't looked at that one. We can do it right now, in fact. Yeah, you can do that too. Beverly had a very good observation, taking a bit of a profit and letting the rest of the trade run. Scaling out by taking some profit here, locking in this bit of a piece, half the trade, and then letting the other half maybe like this, that risk being on the table. And all in all, together it's break even because half is blocking in profit, the half is still at risk, but together break even. But if the second part still turns, if price does turn like that, even better, of course, for the entire trade. That's a very good idea. But a bit late for those that didn't do it now. It's a bit late because it's retracing as we speak. It still would lock in maybe, if we're lucky, 100 pips. All right. So anyhow, whoever is not in that trade, I think we can still look for resistance at these fibs for a turnaround back down. Good momentum to the downside. It's basically like the euro dollar, isn't it? A bit of a break right there. But the euro dollar is not breaking, the euro pound is. And that's because it's this pound dollar that's really booming to the upside. And the news event kind of wrecking that trade idea. of upside and bounce, and price more or less getting right to that resistance. But still, there's the chance of a bit of a bull flag like that and one more bounce. Wouldn't dismiss that. That's still possible. So yeah, this was a good trendline break. Indeed, I agree, Roger, and could be a good breakout as it's developing. It's 9 minutes from now. We have this candle closing, but we have a news event on the pound still 40 minutes from now. So let's see where the price is. But if it hooks back to resistance here, that could still be interesting for a move lower and a continuation down to support. Let's see how this 4-hour candle closes, for instance. If it's something like this, good bearish candle, then a bit of retracement and it could keep falling. All right, so talked a lot about ideas, and now we're getting to the end of the webinar. So not many pending order ideas, I think, except the dollar yen at 115, 115.50. If I remember correctly, that's the only one. Oh, the euro dollar at 110. That's still far away from now, but okay, it's still something in my mind. 110. Some market order potentials at resistance and support, and the break here. Pound USD, if it hooks back, as I said. Quick summary for everyone. I know that was a long talk here. So dollar yen, if it posts a candle like this, or market order somewhere, pending order somewhere higher, or if it does close with a good 4-hour candle like that, or daily, as Roger was saying, that could be good setup for short. And in that case, this was a correction. We got momentum here, we got correction, and this could be the continue. Same for the pound yen. Pound yen is still pushing up because of the pound dollar, so that's why it's so important to get a 4-hour candle at the minimum. Euro yen 4-hour candle as well. Aussie, messy, not that interested, but if it does show a good daily bounce here, that could be interesting. New Zealand dollar want to see a daily candle push through that support. Dollar CAD not interested at the moment. Keep an eye on it. Euro pound 4-hour could be continuation down to this support. We can put a fib actually from here to here. And let's see. Let me check the 1-hour fibs quickly. $76.66 could be the target. Pound odd could be a pullback for more downside. Euro odd could be still a small fall left. And New Zealand CAD, if it hooks back, I think it could fall down to that target. And gold, I think, could be interesting, the 61.8 fib. All right, thank you so much for joining. We got more webinars this week. Just a quick overview for you, and then we'll call it a day. We have market trading actually, but more importantly tomorrow we got strategy, got it mixed up. More importantly tonight, we have trading the markets with pullbacks. Instead of Thursday, we don't have it on the usual Thursday, we got it tonight instead, because on Friday, Ned and I are going to London. Well, actually on Thursday, because Friday we got an exhibition. We're going to have it's a Forex exhibition in London, and Ned and I are going to visit. We're going to have a 30-minute seminar as well at that event, which is viewable online, by the way. So if you're interested in that and you're not sure how to join, just let me know or send me an email to, just type in the chat where you can send that email to. All right, so that's why we have it tonight, this webinar on pullbacks instead of Thursday, because we're traveling. But tomorrow, still normal strategy webinar, and then it's going to take a look, by the way, at channel bounces system that he uses, channel bounces trading system, in the evening, 5 p.m. tonight, no, 6 p.m. tonight, Central European time, and tomorrow. All right. Well, good trading, and see y'all soon. Cheers.